Good morning, everyone. Happy Friday. It's Darius Dale here to present our macro minute for Friday, October 22nd, 2021. Starting with markets, we got stocks up modestly, commodities up modestly, dollar down, global bonds down, U.S. bonds up. If you blinked, you missed the corrections in commodities and crypto yesterday. Stocks barely even stubbed their toe. It continues to be bear scraps for the bears who are trapped and need to chase. On the economic front, yet flash PMIs for October, they were decidedly mixed. Which was marginally disconfirming of our post-Delta bounce view. We still maintain the view, but we want to be honest with respect to the data. Yet Australia, Japan, and the UK, all beleaguered economies with respect to Delta, saw the manufacturing and services PMIs pick up for the month of October. Germany and the Eurozone saw manufacturing and services both tick down. France is a little bit mixed. Further supporting the view that we're seeing some disconfirming evidence were slowing survey data out of the U.S. for the month of October. Yet the Philly Fed ticked down 7 points to 22.8. The Langer Consumer Comfort ticked down 5 points week over week to 49.7. That's actually the lowest reading we've seen since February. On the inflation front, stagflation remains the highest probability bottom-up macro regime outcome for both the U.S. and global economies in Q4. That distribution remains fairly flat, but stagflation, it does remain the modal outcome. We got some more accelerating inflation data out of the global economy this morning. Japan CPI, last night, Japan CPI came in at the highest since July of last year. Japan core CPI came in at the highest since March of last year. So we're at the sort of peak of a lot of global inflation sine curves here in Q4. The reality is it really depends on whether growth accelerates rates or not into the sector and style factor leadership in the market. Taking it to the chart here, we got our value to growth ratio. That's the most economically sensitive of our intra-market analyses. And as you saw, we saw a nice little pickup, coming out of the sell-off in September into early part of October. But now you're seeing it kind of tick down. Markets are obviously doing well, broadly speaking. But the fact that this is ticking down is saying that the growth expectations are actually coming down. And a lot of what's driving markets really is policy and inflation expectations. This continues to suggest that investors should have fairly balanced portfolio construction. It's not this one-way reflation trade that we saw in the first part of last year. I continue to say that. I've been saying that for a long period of time. This is why we have such balance in our 42 macro portfolio construction, but we think you should have some fairly balanced tilts as well. Going to the signals, overbought, you got DAX, S&P 500, Nikkei, silver, Aussie dollar, and British pound overbought. Oversold, you got the VIX, Nat Gas, Bloomberg Dollar Index. Today's risk reward setup, you got the S&P 500 3.5% downside versus 0% upside. Bloomberg Dollar Index 0% downside versus 1.6% upside, and the 10-year Treasury yield 16 basis points of downside versus 7 basis points of upside. Very similar setup, like we called out yesterday. Implied vol discounts, a lot of cross risk assets. It's not the best time to chase, but we still believe in a positive resolution to asset markets into and through the early part of next year. So with that, Darius Dale presenting our macro minute for Friday, October 22nd, 2021. If you like what you see, hit like and subscribe. We appreciate you. Cheers.